Gold is showing warning signals for short-term correction, but don't forget to buy when prices are down. We're going to look at the technicals today. In gold, we're going to look at the one factor, the one intermarket factor that could trigger a correction, a short-term correction in gold. We're going to talk about the target range for that correction. Let's get right into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Happy little Friday, as they call Thursday here in Poland. I'm in Warsaw right now. I hope your week has been great and successful. It's been a hell of a great week if you are a gold and silver investor. But now, as we can see here in the gold chart, warning signs are increasing that a short-term correction, which I had predicted in the last gold video on Monday, is on the horizon. Now we might push all the way up to 4,500, which is more than I had anticipated, but we know how the markets work, especially with the algos and especially with trend following investing, as is very common with institutional investors in the commodity sector. Around 4,500, as you can see in the chart, we got the 200-day moving average, the golden line that you see right here. Also the uptrend, and, well, obviously the mother of all important factors, which is the long-term downtrend. So this is important as it defines the zone for us that very clearly will trigger the aha, light bulb is going off next to Homer Simpson's head type of signal for the main market and the mainstream investors that the correction gold is over and that the next leg up in gold has started, because we break above 5,050, we break the downtrend, and we jump above the 200. So while short term, that is monster resistance, we know now very, very clearly the price zone at which the sentiment of the market will flip for gold and silver. Now, it has already starting to change. I have pointed out the bearish-to-bullish reversal, but right now, especially if you get a short-term correction, we still get a chance to get in early ahead of the majority of the investors, buy up mining stocks at really attractive prices. Not the best prices anymore, but again, that's in the past. We can't change the past. Trust me. I tried to turn my Peugeot into the DeLorean from Back to the Future to go back in the past. Doesn't work. Probably because it's a French car, but who knows. We have to deal with the situation as it is now. And as it is now, again, if we zoom out, if I would have told you in January around 5,000, if I would have told you in March around 5,000, if I would have told you in April around 4,800, you get the point. If I would have told you in May around 4,700, 4,600, hey, we're going to get a chance to buy gold and the mining stocks probably at a correction between 4,350-ish to 4,200. You would have put on a skirt and danced like a cheerleader. I really do not want to imagine this image, but okay, you get my point. We would have all signed up for that. Now people are in shock and frozen because they look at the prices we saw in June and July around 4,000 and say, oh, I can't believe I missed this boat, and now I'm waiting for the prices to come back down. Well, first off, they're likely not going to come back down. There's still a chance, that's true. We're going to talk about that in a second. This is important. You really should stay on to understand the one intermarket factor that could put real pressure on the gold price. But if we look at the current prices in the big picture of the gold supercycle, hey, these are really good. These are really good entry chances that we're getting here with the mining stocks. So how low could the correction go? And why do I think that a correction is coming? Well, the first thing is the RSI is close to being overbought after we had a monster move basically since the beginning of August, from around 4,040, let's say, all the way up in the top to 4,440. So we basically had 10% in about 2 weeks. That is a monster move for gold. Now, a lot of that is, as I had told you before, and it's clearly showing, short squeeze covering. There were clearly large players in the market that were betting on gold going below 4,000 and getting the massive sell-off. And it didn't come. Then we started to break the important technical barriers, most importantly the purple line, the 50-day moving average. Squeeze! And here we are. Now, majority of positions covered by now, clearly, but we also see with the long tails here, we are kind of running out of steam over 4,000 short term. And that makes complete sense because, again, the sentiment shift is not complete yet. Remember, just because you're ahead of the market with hot trades of the day here and we are gold bulls and we are better informed, that does not translate to Wall Street and the majority of the investors at all. What I do not like in the chart is not only the overbought RSI, but that we're starting to get negative divergences. If you watch the videos in June and July, I pointed out to you, hey, I think we are near the bottom. We could get the undercut, but below 4,000, but things are changing. And the first factor I pointed out to you was a positive divergence in the RSI, meaning the gold price was making lower lows, but the RSI was starting to make higher lows, which showed us selling pressure is dropping off, which we now know, and I pointed this out in a previous gold video. Again, hit the subscribe button if you're not subscribed so you don't miss any of these videos. I'm not going to put this graphic up again here. Central banks have been buying aggressively in the second quarter. Highest quarterly gold purchases by central banks in the second quarter this year since the fourth quarter of 2024. So that makes complete sense that the selling pressure was going down because, well, people were done selling after 6 months and the central banks were buying. Now we're seeing, especially on a shorter time frames, as you go into like the hourly charts, 4 hours, you clearly see the negative divergences, meaning gold is still making higher highs, but the RSI is starting to fade, meaning the buying is slowing down. The energy, the power behind the moves is slowing down. We're starting to see this in the candles already. Now, I just added this support line, this blue support zone here. And you know what? I'm going to take out the higher highs and higher lows. You have seen this often enough by now. You know what's up. You follow the channel. And this makes it much clearer. So this is what has to happen. We have to close below this zone. So let's say 4,345-ish. And that would then be the final trigger for the short-term correction. Now, how low can this correction go? Originally, my correction zone was this here, 4,250, 40-ish, maybe back to our beloved 4,215, which I had pointed out for so long and so many times that it basically had to do therapy sessions because of it. That's still in play. I'm not 100% sure we're going to get there. Because we're starting to get the change in sentiment, because we see this aggressive central bank buying, who obviously are watching this and are saying, gold is turning. I might not get another month or two of really low gold prices below 4,500. August, in the seasonality, usually a really strong month for gold. Maybe I should buy the weakness. Institutions certainly are looking at gold now, looking at the central bank data, and especially the Americans who are massively underinvested in gold and silver, and say, ooh, yeah, maybe I should add some gold here. And they will start buying the weakness. So I think we have three zones that we need to pay attention to, and that we have to adjust the buying and the mining, the buying of the mining stocks, if that's what you want to do. I'm not your financial advisor. I just look at the charts and try to sound smart. First one is the correction is happening, but it's going to be really, really shallow. Unexpectedly shallow. And that would be, you know what, I'm just going to draw this in here real quick. Like this area right here. Maybe we can move it up to here. So basically around 4,330. That's a small move. But it's possible that we're going to start seeing buying already here, because there are too many people that are underinvested, that are looking at the charts and are seeing what's happening, the bearish to bullish reverse, and say, I need to get in. I need to get in fast. What difference does it make to me long term if I start put here, if I have nothing, or about $100 lower? So this is still, this would be number one. This here would be number two. This is the zone that we talked about. And then number three would be the 50-day moving average to retest, which would make the most sense and would be ideal, because we're still making a higher low, fourth higher low in a row. Great, another positive signal. But the retest of the 50 would really ensure a lot of investors that are uncertain, hey, is this just an extended bear market rally because of the short squeeze that we saw? Because the factors that gold was trading on are gone? Or is this really a turnaround? And breaking the 50, retesting it from the top, confirming it, and then moving up is a big time signal. I do not see how we're going to get there, except for one factor. We're going to talk about this in a second. First, and this is important in order to understand the correction, we need to look at what are the factors that actually moved gold up in August. Where did it come from? Because if we look at the gold chart up to the very end of July, even first day of trading in August, okay, I even take the second day of trading in August, you would have never guessed that a move like this is coming. Yeah, we had the third higher low, the triple bottom. I pointed it out. We were on this early here on the channel. But did I expect this? Not this fast. I expected we go after the 50-day and then maybe come back down. And there are three reasons why this move happened in the viciousness and as fast as it did. First, short squeeze. Talked about it. So that should be pretty much covered. The next big short squeeze would be if we jump about 4,500, 4,550, meaning above the 200, above the downtrend. We're still far away from that. So second is the decline in the dollar. We talked about it. We're going to talk about that in a second. Third is run up to the new inflation data and therefore front running the possibility that and now the likelihood that we're not going to get a rate hike in September. Well, CPI is now behind us. The market is now pretty convinced we're not going to get a rate hike. That story is baked into the gold price. Short squeeze is done, leaves the dollar. Now let's look at the dollar. And this is where things get interesting. Here is the dollar chart. And you know what we've been talking about. Double top in the Dixie. And it's fighting with this uptrend that started a couple of days before we began the bear market in gold and silver. Funny how that plays out, huh? Big time rally started 2 days before we got the bear market in gold and silver. And it looked pretty bad for the dollar, as you can see, for a while. But as we have to notice, we're not seeing additional selling in the dollar yet. It has stabilized at the uptrend. That is bullish. We can clearly see what's going on, right? This is what's going on. If the dollar breaks above this, actually, you know what? I gotta make this yellow. Forgot my colors. Here we go. Above this yellow resistance zone, then this would be a bottoming at the uptrend. And as much as I hate to say it as a gold bull, that is pretty bullish for the dollar. And that in return would be the fundamental reason that would push down gold and could push it down all the way to the retest of the 50. We also see very clearly RSI right? Starting to move up. Look where we are. We're basically at the same point in the dollar, in the Dixie here, where we were at the end of July. But the RSI is actually, I can even make this a little lower. So there we go. So you can see it a little better here. But the RSI is actually moving up. And that makes complete sense and tracks with what we just saw in gold, where we saw the exact reverse. Short term. This is a longer term RSI. Positive divergence. Gold, we're seeing short-term negative divergence. Again, because of the inverse relationship of gold and silver, that makes sense. So we need to watch the dollar as like a hawk right now. This is what's going to determine if the correction in gold is going to be very mild or actually going to take us down to the 50-day. If we're just going to doink off this resistance zone, just, hang around here like a drunken frat boy that doesn't want to go to class, and then break the uptrend and move all the way down to the 200-day, then that would be a scenario of shallow correction in gold, and then we're making the move for 4,500. If we break this resistance, we move all the way up, probably to the 50-day. That is what then could push us down in gold further to target zone 2 for sure, probably target zone 3, meaning the 50-day moving average. So what does that mean for us? That means we want to have our buy list ready, because remember, bearish to bullish reversal, 80% in my opinion probability that the low is in gold, right? And every day we stay above the 50-day moving average, even better, it increases. So in that scenario, we want to use corrections as buying opportunities. That's what bull markets are, right? Corrections are buying opportunities in bull markets. We got a bearish to bullish reversal. That's what we should do. That's what I'll be doing. I'm not saying that's what you should do, but that's what I'll be doing. So I'm looking at the mining stocks that I like, that have decent prices right now, so the stocks haven't moved crazily. And that's probably what I gonna add in correction target zone 1 and 2. We get to 3, I probably should get decent prices that are not so decent right now, but then will be decent, as other stocks on my watch list that right now have just run up too far for me. So that's my playbook. And you make your own decisions, but that's how I see the situation right now. We see us tomorrow, Saturday, newsletter video, big one on strategy, really important in my opinion. It's going to be on financial behavior, understanding markets, understanding portfolio management, understanding how to act in the markets. I honestly think this is the most important newsletter video that we have sent out to the VIP newsletter. It's free. You can sign up. Link is in the comments. Or go to bullmarketlifestyle.com. You can sign up there. Also, again, free. We're not going to spam you. No advertising, nothing. Just content. But this content on Saturday, in my opinion, really important. Have a great little Friday. We see us tomorrow on the real Friday. Bye-bye.